What's the dream of? What's the hope in? What's the doubt for? Live to no end. This is living. The life I've been given is a gift. If I'm a living, I'ma live it to death. So what's the dream of? What's the hope in? What's the doubt for? And live to no end. This is living. The life I've been given is a gift. If I'm a living, I'ma live it to death. Yeah.
Warning, the following content. No, just kidding. All right, what's going on, guys? Back here with Josh in the studio. And again, welcome to Family First Life. Welcome to Selling Insurance. This video, you guys have already learned some of the amazing things about selling insurance. You've learned about our amazing advanced system and how we can get paid, a year's commission up front. You've learned the potential of how this can change your life. This video, we're kind of going to give you a little bit of a warning, a little bit of a trigger warning here. This one, we're going to talk about kind of the real deal here, what you can expect, and kind of the other side of this business, the things that will make you fall out of this business faster than you got into it. And these are things that, looking back, I wish that somebody would have told me earlier. And you might watch this video and think, like, are they trying to scare me out of the business?
Yes, we are.
Yeah, that's exactly right. Because the honest truth is this business is not in the long run for weak people. And you can become strong. Like, I was not strong when I got into this business. I feel like that's a muscle, something that gets built in this business over time. But overall, like, if you're someone who decides to stay weak in this business, to stay emotional, to not grow and not try to get better, not learn from your mistakes, and not listen to mentors who've made pitfalls before you, you're going to fall in those pits. And we're going to tell you that you were going to fall in that pit. And you said, no, I'm fine. And you're going to fall in it anyways. And no offense, but we're going to say, I told you so. And there's too many times that that's happened where I wish that I could say, hey, I wish there was a video that we would have recorded earlier on that somebody watched that we said, we warned you. So now in the future, when these types of things happen, you can't say, hey, nobody ever told me that. What are your thoughts, Josh?
Yeah, I mean, I think this is a disclaimer that everybody needs to know. This is real business. In business, there's risks and rewards, right? It's not like you go into a job, you just punch the clock, and you don't have to think about it when you get off the clock, right? You can have amazing things happen. You can make an incredible impact financially on your family and others. Also, you can hurt yourself. You can legitimately, you can lose money. You can make bad choices, right? But here's the thing, and that's what we're going to talk about in this video is, if you kind of follow along best practices and learn from people that have gone down the path and maybe made the mistakes but course corrected, you can win. All right. And the other thing I would say is before you even dive into this, past this point, you have to take a everything is my fault attitude. If it's good, it's your fault. You did it. Congratulations. If you messed it up, it's not insurance's fault. It's not FFL's fault. It's not your agency manager's fault. It's your fault. It's the choices that you made, good or bad. Now, if you made bad choices, you can always do better. And that's one thing that, I feel like I did pretty well, right? Not that I avoided all of the potential pitfalls, but each time I said, I made that choice. I know what I need to do now. I know what I need to make it better. And, that's kind of what we're here to talk about.
Yeah, absolutely. And I think that it's so important that we have this conversation up front. We want to talk about profitability. We want to talk about your long-term plan. We want to talk about the things that no one wants to talk about. We want to talk about chargebacks. We want to talk about when clients cancel their insurance. We want to talk about how you can overspend and how you can not budget well and how you can not be a good steward of your commissions. But on the other side, it's doing all of those things well and how that can set yourself up for success. If I were able to take this video and say, hey, here's person A and person B, and they both issued the exact same amount of insurance, and here's how person A is so far ahead and they saved $50,000, and here's how person B somehow is in debt and on their way out of this business, but they both sold the same amount of insurance, you'd be kind of confused. You're like, well, how is that even possible? Well, it's based on your choices. It's based on your decisions. So I think the first thing as well is, Josh and I, we've been in many businesses. So we've been in network marketing. We've been in direct sales. We've tried to start our own traditional businesses. We've also been friends with people in many different industries. And I think my first disclaimer is whether it's here with Family First Life, whether it's selling insurance somewhere else, whether you're selling solar or cars or real estate or digital marketing, or you're doing crypto, or you have your own business, whatever it is, life is long, business is hard. No matter what business you're in, there you will be. So if you have your own bad habits, we always say, hey, the grass isn't greener on the other side. The grass is greener where you water it. We get this shiny object syndrome. And I'm the first person to say I've had shiny object syndrome so many times in life. And Josh said it best. It's not FFL. It's not insurance. It's you. Every single business has its things that you'll come up with. So you could be here and say, I hated that experience. And you go somewhere else, and you're going to find things you don't like about that experience either. But you can learn best practices here to make sure that profitability and return on investment and getting better, those are the things that I think are the most important. If you're here a year from now and you don't get any better, that's a problem. So we're going to talk a lot about that. So where do you want to start, Josh?
I think a good place to start is let's just hit the elephant in the room, talk about chargebacks, and then we can get into some of the other topics. But if you want to explain, what a chargeback is, and then we can kind of talk about how to mitigate that. Yeah.
So I think the other thing is we're going to say mitigate, not eliminate, not avoid, because you will never avoid chargebacks. The industry standard says that 20 to 30% of every family that you help will cancel their policy. It'll charge back. So you guys remember in the previous video where we talked about how we get paid and we talked about the advance. So it's an advance. So you are getting advanced the money up front. Have you guys ever seen those payday loan things on the corner where they say, what is a payday loan? A payday loan is, hey, I'm getting paid on Friday, but it's Tuesday and I need the money early. So they advance you your money, and you have to pay them back because they decided to pay you early once your paycheck comes in. This is a little bit different in regards to if I sell, same client, Sally, $84 a month, $1,000 a year. She comes in and I'm at 100% commission. My advance when it's all said and done is $750 up front. The other $250 is paid out on months 10, 11, and 12. So that 9-month advance says that I'm going to get that money up front. But if Sally goes ahead and cancels between months 1 and 9, I am going to get charged back for the remaining amount of premium that is left on that advance. So let's say her policy is $84 a month. She cancels 3 months in. I'm not very good at math here, so we're going to do some math here. So $84 times 3 months. She's paid in $252. If you got advanced $750 minus $252, there's $498 left on the advance. She cancels 3 months in, you're going to get charged back $498. Do you think that was clear enough?
Yeah.
Okay. So simply put, at the end of the day, if I go out and I sell 10 policies, 2 or 3 of them are going to fall off the books. Now, how does that work? So people go, well, chargeback, what does that mean? Does that mean they're going to take the money back from me, or they're going to pull it out of my bank account? How does that work? Luckily, and what I love about the insurance industry is that it's like an interest-free loan every time that you sell a policy. That's kind of how I like to think about it. But if a policy does fall off the books, you get a negative commission balance with the individual insurance carrier. So we'll just use Americo, for example. Americo, they'll give you your daily Americo update email every single day. They'll tell you either if you're receiving a commission or if your commission balance is negative. So if I go and I sell 5 or 10 policies in the week, each day I'm seeing my positive Americo commission balance and what's going to pay out the next day. But let's say 2 or 3 policies fall off the books, and I wake up and the commission balance says negative 2,000. Now, Josh, could you explain kind of what you do when you see that and how you get out of it?
Okay. Well, first thing, you're sitting here watching this, and you make whatever you make on your job, and you log into your back office and you go, oh my gosh, I'm negative 2,000. I don't even make 2,000 in a month or a week or whatever. You're freaking out. Here, 2,000 is not a big deal. That's 1 or 2 policies. So you need to know that, right? Mm-hmm. And if that happens day one, you don't need to call the carrier and put it on your debit card, right? You need to simply sell another policy, okay? But let me go on a deep dive on the negative side here, all right? If you do not, so here's what's happened in the past. We've seen this happen, okay? You take Johnny. He goes out and makes some sales, and he makes more money than he's made in his life in a month. He's happy. He's excited. And what does he do? He wants to go enjoy his money. So he takes a week off. He takes 2 weeks off. He goes and spends some of that money. He goes to what we call Disney World, right? It's like, hey, I'm going to go. I've won the jackpot. I'm going to go enjoy life. And he comes back a week, 2 weeks, a month, sometimes 2 months later. Inevitably, even if one policy charges back, now you have a negative with the carrier, okay? What's going to happen? If you leave that unattended to, you do not address that, you don't call the carrier, you don't sell anything new, at some point, roughly 90 days, the carrier is going to go, hey, they're going to send you a bunch of notices, and then ultimately, if you don't take care of it, you're terminated, okay? They're going to terminate your contract, not FFL, the carrier, okay? If that were to happen, you go into something called the vector system. It's kind of like the check system with the banks. If you overdraw your account, don't take care of it, right? Again, these are interest-free loans. They want their money back. If that happens, it gets even worse. Some of the other carriers will not pay you advances, and other carriers or other companies won't even contract, and you have like this stain on your insurance license. And of course, you don't want that. Nobody wants that, okay? So that is the bad that can happen. You're like, oh my gosh, this is a huge problem, all right? And so the number one solution, all right, now we're going to talk about, there's a few different scenarios where this can come up and how to make it little strategies. But the number one overarching thing that will mitigate this entirely is consistency of business, okay? Now you're saying, well, I can't work, 40 hours, 50 hours a week. I'm starting part-time. No problem. Be consistent in your part-time, okay? If you've ever worked a job in your life, you worked a schedule, right? You got to work at such and such time. You left at such and such time, right? You worked 3 days a week, 5 days a week, 6 days a week, whatever it was. We get into entrepreneurship and business, and all of a sudden we go, we can work whenever we want to. Yes, that's true. You get to decide if you've earned a day off, right? So I'm in the studio with you today versus at home, running business. And so in a sense, it's kind of day off, even though we're doing work, but I've earned this, right? Mm-hmm. But people, they come here and they go, I can just never work and, just do this laptop lifestyle thing. No, you need to be consistent, especially in your first year, right? So my advice to you is set a schedule, whatever that schedule is, and be consistent. Put in business every single week, okay, if you can. Now, I'm not saying don't take time off ever, but I am saying pay attention and be consistent, and that will avoid much of the problem, right?
Yeah, I couldn't agree more. I think that if you're going to have a career as an insurance agent, you should want to take it seriously. You don't want to be out of the business here in a matter of a couple months. And if you see yourself and you're here and you've been here for a month or two and you are not managing it well, it's better to stop now. It's better to stop early than it is 6 months, a year into this business, because at that point it can look much different. It can be much harder to climb out of those spots. And we're not trying to scare people, because again, on the other side of this, you can have your life completely changed by some of these advances in commissions if you learn how to sell insurance on a full-time level on a consistent basis. I mean, I came into this business and I was, $50,000 in debt to the IRS. I owed money to friends and family. I was coming off of a super nasty bankruptcy. I couldn't qualify for a house, or a car or any of those things. And, within a matter of a couple of years, all of those things have changed, been able to move across the country, build a house, and, pay off all of those debts and, stay debt free and get ahead of the curve. So also with good practices, your life can change. And I think for me, I came into this business having such bad practices and previous commission-based sales that when I saw the hole that it dug me into, because it's not just insurance, because there's so many other things outside of just chargebacks where if you're not a good steward of your commission, saving for taxes, budgeting, all of these things, you can put yourself in a world of hurt, because at the end of the day, when you're selling, if you don't sell, you don't get paid. If you don't sell, I don't care if you're selling cars, I don't care if you're selling solar, I don't care if you're selling pest control. You stop selling, you stop getting paid. So if you have business fall off the books and that money was advanced to you, you're going to have a negative commission. And if you decide that you don't want to work anymore, that negative commission is going to go to the carriers, and then ultimately they're going to terminate your contract. And then ultimately you're going to get a call or an email from one of your uplines, trying to collect on those commissions that were unpaid back. So again, we don't want to scare you. We do want to scare you. I don't know which one it is at this point, but we want to be real with you. I think it's just important that if you're in this business that somebody tells you exactly what's going on up front, absolutely real. So Also, on just the back side of this, we want to help you become profitable. We want to help you have a positive ROI where you look back at the end of the year and you say, I made more than I spent. So let's talk about this as well. Like there's people who come from no business background, or somebody who comes from a different business background where they're not having to invest into their business like a traditional business owner. So talk to us a little bit about that mentality about investing into your business, especially in insurance, and what it can do for you on the positive side.
Yeah, so you used the example a minute ago, person A, person B, and that's the cool part. I think FFL from, once you step in here, it is the most entrepreneurialistic vehicle that I've ever seen, where a lot of times you come into a sales role, and even if you're a 1099 person, it feels like a job in the respect of the overarching corporate overlords, right? You have to do it this way, say it this way, and FFL, it just kind of goes, here's the keys, long as you're not hurting people and being ethical, like you do you, which is great. So, person A comes in and they go, hey, I'm going to reinvest everything aggressively. I'm going to try to build this thing as fast as I possibly can. Person B goes, hey, I don't want to build a business and an agency. Maybe I just want to sell, and that's okay. But there may be a little slower pace, or maybe they're a bit more reserved in their reinvestment, and that's okay as well. You just have to know what kind of person you are, and again, take responsibility for that. So when I came in, I was definitely more like person A, and at times, I was definitely riding the line of profitability, but I took ownership of that, right? And so if that's you, and you say I'm going to pump it all back in, just know, right? There's risk and reward. And if you're the other kind of person and you're seeing what everybody else is doing, you have to know you, right? And so if you're seeing a guy that's pumping everything back in the business and this is what they're making, this is what they're spending, and you're like, oh, I have to do that. And you're like, you're spending that money and it hurts every time you do it. Maybe that's not you, and there's a secondary conversation. So you kind of have to know yourself. But again, this is not a job in the sense that, you just show up and, you have to think and make decisions on these kinds of things, on what you're going to do, whether it be from leads, different, marketing campaigns, choices on whether and what staff to hire as you grow this thing. So, these are decisions and things that you probably have never, many people have never had to face before. They don't know how to, go about it. And it's not if we were all robots, it would be easy just to go, well, do this, say this, and then you'll get the outcome. And well, we're dealing with the most complicated thing called people, right? So there is no cookie cutter answer. There's best practices. And so just, keep that in mind. But I think, the number one thing that just a basic thing that you should understand is when you make $1, you make your first dollar in insurance, that is not your dollar. That is your business's dollar, right? And so, and this can get very complicated and very fancy very quick, but as just a baseline, right? Every time we get paid, it goes into a business bank account. Now, you don't have to go set up an LLC and all that stuff. Just
separate from your personal.
Yeah, separate from your personal. So we have our business bank account, right? That's where we buy leads from. That's where, different, marketing campaigns, anything that we spend on business.
Commissions get deposited there.
Yep. And that is completely separate from our rent and our groceries and all that kind of stuff. And so, if there was a month where I didn't sell as much and I go to my wife, Michelle, and she's like, well, hey, I'm ready to go, buy this and this for the house, right? I'd have to look at my personal account and go, well, hey, we didn't do this. The business comes first, because the second that I stop feeding the business, that stops feeding us, right? And so I've seen some people, they take all the money out of their business, they go spend it on their catching up on their bills, right? If you're in your first couple months here, don't go start paying off debt quite yet, right? And they drain all the money from their business, and it's like they took their business out in the backyard, shot it in their head, and now it's not feeding themselves. So the business comes first.
Yeah, absolutely. I mean, if you're somebody who's coming to this business like me with debt, again, as much as we're trying to scare you, we're also trying to give you best practices here. So I came into this business with a bunch of debt, some pretty high payments, and the first thing that I did is I learned this concept from Jordan Lowry that was about learning how to play with house money. Now, this is something that I took super seriously from day one. It was something that I said after this initial lead investment, I'm going to do whatever it takes to make sure that I help some families with this initial lead investment. I'm going to make our money back, and then I'm going to have money in the business that I can operate from. So I remember I had a conversation with my wife, Katie. I said, hey, and she was working as a teacher at the time, and I was, an entrepreneur, and she was paying all the bills. And, so I had to ask Katie and say, hey, $1,500 from our savings account, that's a lot. But that's what I'm going to invest into leads because I want to go all in with this. And we had that conversation. And at that point, I went out, and obviously it happens differently for everybody. Some people, they don't protect their first family for a week. Some people, it takes them a month. Some people, it takes them 90 days. If it takes you 90 days, it's way too long. But I was able to protect 8 families my first weekend in the field. And, it was pretty lucrative for us. So I was able to make our money back plus, a few grand. And at that point, what I did, I took the original $1,500 and I put it back in our account. So they call it house money because let's say you go to the casino. I'm not too much of a gambler, but roulette's always fun every now and then. But if I come in with $100 and I put it on black and it hits black and I win $100, now I have $200. The original $100 goes back in my pocket, and the rest of the night is enjoyed off of the $100 of house money. I'm playing with house money. So that's this concept here. So I made back my initial $1,500. I put that back in our savings account, and then the rest of the money stayed in my business checking and savings account. And at that point, I used that to make my next lead purchase. And then from that point on, there's a couple other practices. I like to have a nice business savings account where I put a portion of money to the side for taxes. We're not CPAs. We both have a great CPA who helps us with that stuff, but save money for taxes, 1099. Trust me, you do not want to be in debt with the IRS. That's just really important. I decided to put 30% of everything that I did into a savings account. I was religious about it. I wake up every single morning. It didn't matter if the deposit was $3. I was putting $1 into that business savings account, and I did that every single day. And, if you do it right, you probably won't pay 30%. You'll have some extra money at the end of the year, and I use that. If I ever came into dire straits and I had a bad week or a bad month, I could borrow from myself, use that for leads, put it back later. So there's just some best practices that are important. So not going and paying off everything too quickly. So I didn't go and pay all of my tax debt to the IRS off immediately. I didn't go back and pay off all of my friends and family that I owed money to immediately. I fed my business to the point where I was consistently helping 10 families every single week. It got very consistent and predictable to the point where probably about 90 days in, I started to get a little bit more aggressive on clearing away some of those debts, creating a little bit more freedom in my life in terms of personal expenses. And I really tried to stay lean. I mean, my wife and I, we were a one-car family for almost the first 8 months that I was in business. And then finally we got a second vehicle, and that was mostly because we were having a baby and we needed a more family-friendly vehicle. And, I'm still driving the 2009 Toyota Corolla with 250,000 miles on it, and I probably did 100,000 plus miles seeing insurance clients in the home in that car, and I'll keep driving it until it doesn't drive anymore. So don't go out and buy a $900 a month truck payment right away just because you make more money than you've ever made before. Don't go out and go get a mortgage immediately if you can qualify. Keep your expenses as close to the same as you possibly can, because you're going to have new expenses in your business buying leads every single week. And you start to build this business for a while, you might want to hire your first virtual assistant or your first staff member to help you keep things organized and on the books. And you're going to have expenses that you're not used to, especially if you've never been a business owner before. So keeping those things separate is super important.
Yeah, and I mean, there's going to be opportunities. You mentioned a virtual assistant. I mean, that is something that we've used. You suggested that early on. We got on that train, and it saved us so much time and so much headache to dealing with all these back end things. And you don't want to be in a position where you're like, oh, I need to make this investment. I want to take advantage of this opportunity, but I can't because I have all these personal expenses. I mean, I'm assuming that you're here because you want financial independence, not dependence. So you don't want a bunch of stuff that will come later. And I didn't come into this with a lot of debt, but, again, we had some other challenges that we had to overcome, and, we have a family, and hey, everything costs money, and diapers and all this good stuff. But at the same time, as we kind of learn how to navigate the waters of this thing, I mean, just in the past year, we were able to save the same amount as it took us 3 years between, 2017 and 2019 to make. Wow. Right? So pretty incredible stuff. One other thing I wanted to ask you about, Jamie, and this is not so much from a personal finance, but back to selling, is, we have all these wonderful carriers. We have so many carriers, right? And I think people get very excited and they want to write everything under the sun. They want to write every product with every carrier. And this was something that I kind of did. One minute I'm writing, Mutual of Omaha. The next minute I'm writing this other thing and this other product that we've never heard of, and thinking, okay, if I just get the right product at the right price with the right person, then I'll get the sale every time. And what it did, it spread me too thin.
Totally.
Right?
Totally. And I'm not going to mention carrier names, but Josh and I were joking around. He saw me writing this very one-off carrier the other day, and he's like, bro, are you okay? And I was like, dude, that's a good friendship right there. Friends check on friends who write XYZ carrier, because it's got to be some sort of a one-off situation here that I'm writing this carrier. So the thing is, what ends up happening is people will play what's called carrier roulette. And this is somebody who's not a very good steward of their business. So we have these underwriting guides. We have the underwriting genie. You're going to get underwriting advice. And we've kind of got an order of operations of what carriers we write in what order for a handful of reasons. The number one goal, obviously, is to get the client immediate coverage. And then after that, it's who's going to pay us best. Now, some people say, well, if it pays you best, that means that it's probably a little bit more expensive for the client. That's true. But you also got to stay in business. So I need you to hear me, that if you're going to be the person who's going to price shop and sell your client the cheapest thing every single time, you won't be in business. You really won't. There are certain carriers that it might be $7 more expensive, and you go, well, over here it's $7 cheaper, so I'm going to sell them that. You're selling off of scarcity. You're not selling off of value.
Well, and not only that, but a lot of times, maybe it's one of us, maybe it's the manager, maybe it's somebody who's telling you, okay, we're going to go with this carrier, but it is $7 more. But what you didn't know is the underwriting's easier. They have instant decision versus taking a week, or maybe you're doing telesales and there's a text signature versus the most complicated email signature. So we know those things. So we want to make your life easier. We want to make help the clients, of course. We want you to walk out of the phone, or off the phone call, or out of the home, knowing that they're protected and your pay's on the way. So that's why we suggest what we suggest.
Yeah, I mean, one of the biggest pet peeves is when I say, hey, write XYZ carrier, and you go, I wrote ABC carrier. I go, well, why'd you do that? And you go, because it was cheaper. And I go, and they're like, yeah, the e-app was a nightmare. I'm like, well, that's why I told you to write XYZ carrier and not ABC, because I've been doing this for a long time. So there's a reason and a method behind the madness of why we tell you to write each carrier, whether it's based on immediate coverage, it's based on who's going to pay you the best, the easiest experience for you as a new agent, handful of different reasons. But back to the carrier roulette conversation. I come to this business and I write, 10 policies with Americo, and 3 of them charge back. I get paid on 7 of them, 3 charge back, and I got a $3,000 negative balance with Americo. So then you call up Josh and you say, hey, I'm sitting with Bob and Mary, blah, blah, blah. And he says, write Americo. And you go, well, I kind of want to get paid. So rather than writing, what if I just wrote Moo? So then I get paid, right? Yes, you would get paid. So, but you continue that practice over a long period of time. And rather than writing the carrier that you should write, you write the carrier that will get you paid. 20 to 30% of everything you do will fall off no matter what. So now you start having that 20 to 30% fall off with every carrier, with no-name carriers, with random carriers that you write once in a blue moon. And now you're having to go write business with carriers you shouldn't write business with to pay off the debt, or get in a payment plan with a company that you didn't have any business being in a payment plan with. So I look at it and I say, playing carrier roulette is dangerous, because you're just going to have debt everywhere, rather than picking 3 to 5 carriers. I got 17 1099s last year. Okay. And that's all because, whether it's one-off products, all kinds of things, you're writing a lot of business, that stuff will happen. I'm also an experienced agent who understands how to mitigate and manage those things. But when you're brand new, you really should be writing 3 to 5 carriers. I'm not afraid to tell you the ones that you should write on here, but we're never going to say bad things about a single carrier. But the ones that we'll say good things about: Americo, Prosperity, AIG, Mutual of Omaha, handful of others, and the list goes on and on. So the reason we have that is because those are the ones that pay us the best, and those are the ones that are the easiest for agents to write. They're the ones that have the easiest underwriting. And you're going to say, well, why was XYZ company left off that list? They're great companies. I write those policies all the time, but there's a reason why we don't go first with those companies. So playing carrier roulette is dangerous. Keeping your business narrow is great because if you do have a chargeback, well, I'm going to go help 10 families again next week. So who cares if I have negative $2,000 because I'm going to go write 7 policies with that company next week and it's going to be back and I'll make, 5 instead of 7.
Well, then you get to really know the underwriting, not just from what the guide says, but from like practice over and over again. You're going to make more bonuses from the carriers. I mean, all the good things are going to happen. Just keeping a narrow business with those carriers. So
yeah, I mean, I see people who miss the 10% bonus all the time. And it's because they write business everywhere.
No.
And they're like, well, I just write business everywhere. And I'm like, well, dude, if you would have just taken all that business, it would have got approved with this one carrier right here. You would have got an extra 10%.
Yeah, yeah, and that's what happened to me, right? I remember, there was like you and a few agents, and at that time I was writing more business with you guys, and then when it came bonus time, you guys crushed me in the bonus, and I was like, okay, I'm an idiot. I'm going to course correct.
Yeah, absolutely. So one thing that you talked to me about before filming this video is really like the long-term profitability of an agent.
Ooh,
so
yeah.
I think this is important. So it's not just what you can make today. Talk to us about how your experience can be different, 10 months down the road, 2 years down the road, 3 years down the road, and kind of how it's expected of you that you get better and you get more organized and you follow insurance practices that help make you more money.
Yeah, I mean, look, most businesses, traditional businesses, we all know that most of them fail. That's what we've been told. If you've ever heard anything, 95% of businesses fail in their first 5 years, right? That's a statistic that is rung true for nearly every industry, right? And so, we're not expecting you to fail, but in your first year, right, if you go out, you make some good money, and you pay all your bills and you have money left over, it's a huge win, right? We have an agent, Kasha, first year in business, and she was feeling like, well, I didn't do as good as some other people did. But, I mean, she ultimately, grossed 6 figures. She paid all of her bills and, had the most money she has ever saved in her life in her bank account at the end of the year. Where before that she was living check to check, and, so humongous win. Maybe not as much as seeing other people, but huge win for her, right? So, keep that in mind. But if you get to the end of your first year and you're like, oh man, I thought it was going to be so much better, and I wrote X amount of business, and I thought it would be good. Remember what I said in the beginning, okay? You made the choices on how to run your business. Maybe you overspent on leads. Maybe you went out and had too much fun at the bar, or went to Disney World, or bought a new XYZ thing. Okay, you did that. That's fine.
Maybe you didn't work your leads very hard.
Maybe you took too much time off. Like, there's a zillion variables. But here's what you need to know, right? You need to have the long view, right? Business is a 5-year game, 10-year game, 20-year game. It is not a, hey, what did I do this 12 months, okay? So in the past video, we talked about advanced commissions. They're 9 months. After that, on month 10, you're going to get a back-end commission from the first month. On month 11, get another one. On month 12, another one. And then you get renewals after that, right? So if you can just make it to a year, you'll roughly get about a 20% pay raise. Mm-hmm. And all of a sudden you see these little commissions hitting your bank account, and you're going, I don't even remember where this is from. Those are back-end commissions, right? And then the renewals start compounding. You do it another year and it gets even bigger. So that's one way, is you get to look forward to that back-end money. And I remember, as soon as I crossed 9 months, I went and I was like checking all my commissions. I saw these little, $20 here, $30 there. And I was like, oh yeah, it's happening, right? So that's one, right? You need to make it that far just to get the back end money, because there's money waiting for you. Just keep going. So that's number one. Number two is, this is something that you've started actually doing with more success. We're kind of bad at, we need to get better at, and that is client reviews, right? Mm-hmm. And I'll let you talk about this. So you build up this big client base, and we buy leads and make a sale, and buy leads and make a sale, and do that repetition. But then you have this book of business, and talk to us about what you did and what that process was like, and what how they were kind of communicating with you, and how easy that was.
Yeah, I mean, I had probably helped 750 individual clients whose policies were on the books.
Only 750.
That I had never called back, other than if they needed to change something with their policy. I never called to check in, anything. And I remember hearing this statistic when we were at Integrity Marketing's office, and it said, if you do it right and you take full advantage of your insurance license, and we by no means take full advantage of our insurance license, that a client should buy from you 3 to 7 times in their life. So whether that means they buy more life insurance from you, or that means that you sell them a health insurance policy or a Medicare policy or a property and casualty policy, we mostly take advantage of the life side. But even just from a life perspective, what ended up happening is I went back to all of my clients from month 1, and I just sent a simple text message. Hey, Josh, this is Jamie. We met back in September of 2020, and you got that policy with Americo for $40 a month. You remember me? ? Hey, we've been super far behind doing annual reviews. They just need me to check to make sure beneficiary is correct, see if any information has changed. I'll tell you about any new offers. They'll take about 5 or 10 minutes. You got any free time tomorrow? And I started getting text messages back from clients. And at that point, I got back on the phone with the clients. I reviewed it. Hey, your beneficiary is still the same. Okay, great. Your address changed. Okay, great. Hey, you still got a policy laying around? No? Okay, hey, I'm going to get them to send you a brand new policy out to your house. Hey, and real quick, with everything that's going on in the world right now, inflation, you turn on the TV, the news, blah, blah, blah. They're really saying that if you got a $5,000 or $10,000 policy with inflation, it should really be a $15,000 or $20,000 policy. You see why that makes sense? And people just started saying, yeah, that makes sense. So can I get some more insurance? And I just started selling $5,000 and $10,000 policies or additions to people's policies. And, it was great. And I remember hearing something from another integrity partner, Stephen Yee. He said, if you've been in this business for 3 years and you're still buying leads the same way that you did year 1, you're doing it wrong. You'll never stop buying leads if you're selling insurance. Leads are fantastic. But he said you're doing it wrong if you're not mixing in your leads with your client reviews. And guess what? That client review is free. So it's 100% ROI. No matter what I sell, it's 100% profit. There's no lead spend to be able to make that sale. And then guess what happens? They know you, they trust you, they like you, they bought from you multiple times. You can now ask for referrals. So what you're doing is you're improving your return on investment over the course of the year. So client reviews is obviously a fantastic thing that you can do, starting year 1. It took me almost 3 years to start that practice, and I really regret not starting it sooner.
Something you said, it's like a couple weeks ago, we were talking about this and kind of blew me away. What you told me, what was your, multiplier, right? Year 1, you spent X on leads and you made, your issue paid was whatever the number was, I don't remember. And then year 2, what was those numbers?
Yeah. So year 1, my average policy was around $800 or $900 a year. So the annual premiums, that means that the average policy was what, $60, $70 a month?
Yeah.
And then year 2, my average policy size was $2,500 for the year. So I started selling bigger premiums and I had less appointments, less clients. So I started to get better. So my first year, I think that I, think 6 or 7x'd the money that I spent, which is still, really good in regards to, ROI. But then my second year, it was 15 or 16 times what I put into the business lead wise. I was able to issue in business. And I think that that's also personal responsibility. And this will be kind of where we start, bringing it home and landing the plane here, is that I took personal responsibility to get better. I took personal responsibility to say, you know what, if my first year I spent X on leads and I was only able to make 2 or 3 times my money, I was only able to break even, am I going to keep living that same year over and over and over again? We have people who come into our agency, I've been an insurance agent since before you were born. I've been selling insurance for 30 years. Okay, Bob, what was your best year? No offense to anyone named Bob. And he goes, well, I issued X in a year. And I'm like, dude, you've been living the same unprofitable year 30 years in a row. And had you gotten better, you probably wouldn't be coming over here. You'd be doing just fine. You've been doing this for 30 years. Your renewal should be enough that you don't have to sell insurance anymore. What are you doing? So your responsibility is to get better. So, I talked to an agent and they're like, hey, well, I 4x'd, 4 times my money, what I put into leads. I said, that's great, but you've been here long enough that honestly, it should be 7 to 10. You've been here long enough. So you have to take personal responsibility to get better, because it's not just what you spent on leads. It's how many clients and families you helped. Are your ratios getting better? If you talk to 10 and you help 3, fantastic. If you've been doing this for 2 or 3 years, they're leads. They're raising their hand looking for coverage. I get it. You're brand new. You're still learning the system. But of the clients that you're talking to, you should be helping 6, 7, 8, 9 out of 10 people, if you've been doing this for 2 or 3 years, if you get a good, fair shot at it in a real appointment with someone who says, yes, that's exactly what I was looking for. I'm not talking about every person you talk to, but every person that you get on the phone with and you book an appointment with and you say, is that what you were looking for or something different? And they say, yes, that's exactly what I was looking for. You should be closing 6 to 9 of those people out of 10 if you're getting better. So you have to take personal responsibility, and that's where profitability comes. Year 1, you were learning. Year 2, you start to save some money and get better. Like year 3, you're cruising. Like now you got client reviews, you got back end money, you're figuring this thing out. So personal responsibility, that's the number one thing, the number one theme of this video.
Absolutely. Absolutely. So, hopefully this didn't scare you too much. If you're still here, congratulations, right? This is going to be an excellent career. This is going to be amazing. You're going to be able to do incredible things for you and for your family. All the one day, someday things, you're like, I'm going to get this together. My spouse is going to support me, and we're going to be able to do all those things. You are going to be able to do it, right? If you're consistent, you take personal responsibility, you learn the craft, you become somebody that's always improving because you're only getting better or getting worse. And lastly, what I would say is, I think you told me this and somebody told you this, is if you just trust us until we give you a reason not to, we'll all get better together.
That's right. I mean, we got the sign behind us, the best business ever. We truly believe that. We really do. There are a lot of businesses out there. And like I said at the beginning of this video, life is long, business is hard. It doesn't matter whether it's here or somewhere else. Business is hard. You have to get better. You have to take personal responsibility. This can be the best or the worst sales career that you've ever had. I believe that it can be the best if you follow the best practices to become better. You follow the best practices to improve yourself on a daily basis and to improve your profitability, and you're consistently a student of the game. There's nowhere else in the world that I would rather be working. There's nothing else in the world that I would rather be selling. This has been the most profitable endeavor for me out of any sales opportunity that I've been involved in. That's my personal experience, and my personal experience was based on personal responsibility. So that's what this is all about. This can be the best thing ever, or it can be the worst thing ever. We want it to be the best thing ever. But if it's the worst thing ever, we told you so. We told you so. So we love you guys. We hope that this is helpful. We hope that this is going to just bring some clarity for you. And if you're watching this video and you're like, man, this probably isn't the right fit for me, you're probably right. But if you're watching this and you said, that doesn't scare me at all, bigger the risk, bigger the reward, we love you. We love you anyways, even if that's not you. But we want to work with you. We want to help you. We want to help you become as profitable as possible and have the most amazing career here selling insurance with Family First Life. So we appreciate you guys, and we will see you on the next video.